Hi everyone, welcome to video 5 of the basics of Forex. Today we're looking at calculating risk and managing position sizing. So this is a really important topic and probably the most important area to cover with regards to Forex trading. The reason this is so important is this is the real failing point for most retail traders, and the reason why most retail traders fail to make a success of trading is because they can't calculate risk and they can't manage their positions correctly. So what we're going to do is we're going to look at something that I've created that's going to help you guys in doing this, especially if you're new to trading. So if you go to the forexcoach.co.uk, which is our website, hopefully as you already have seen, we've got under the online trading course, we've got totally free of charge the basics of Forex. For anyone new to Forex or unsure, obviously we've got the videos on here which we've already discussed and launched. Now just under here we've got a new tab called risk and position sizing. So if you click on that, it will then bring you to this spreadsheet. Okay. So first of all, just read through this statement. Risk management is the single most important aspect of trading. You need to trade and manage risk according to your trading account size. We have this simple risk calculator tool that will help you set your position sizing correctly. Now you've got two options. You can actually use this tool straight off the website, or the ideal option would be to click this link and download it. Okay. Now this is an editable spreadsheet. So it's probably best if most people leave this alone, because otherwise the figures are going to be constantly changing. If you click on this here, and then if you copy it and paste it into your own document, or use it in this screen here and then just close it down without saving any changes, then it will mean that it stays the same for everybody. So let's just read through the statements first of all. Now this particular risk calculator is designed around our day trading signal. Now our day trading signal is something you can subscribe to if you haven't done so already. Obviously just go to the Forex Coach day trading signal, click on that page, and then you can go through it and sign up there. So it's specifically designed to that in the sense of the actual stop losses and the limit orders that we're using, and the risk size is all set up for that, as well as the markets. However, if you're not using that and you just want to use it for yourself, you can actually change these to things that you're trading, and that may help you. So let's just read through the statement first. So only follow the signal. Don't move stops or close out unless you're an experienced trader and just using our signal service as a guide. Okay, so it's really important. We've had a lot of traders that have done various things, i.e. moved stop losses and been stopped out of a position that's been a winning position, just purely because they're trying to manage the positions yourself. The whole idea of our trading signal is that we do the management of it for you. It saves you having to sit at your screens all day long worrying about your positions. We're here monitoring them pretty much 24 hours a day, except when we're asleep. So yeah, that's the whole idea around it. So don't start changing things. Just follow the signal which comes to you via smartphone, via an alert text to your phone. So we close half a position size when alerted by the signal. Usually this is halfway between our entry and target, and this means we bank half our profits. Again, if you're unsure what this means, basically you need to watch video 4 under the basics of training. So again, online course, the basics of trading Forex. Video 4 explains to you how we do this, how we bank half a position if you don't know already. But what that means is if we're trading a position, so this video here, if we're trading a position and it is up, say £100, then we're banking £50 at this point, and we are closing half the position down. So if the position is £3 per pip, we're closing down £1.50 per pip. Okay. So this is what we do, and we do it the halfway point between the entry price and the target. So in this case scenario for the Euro-US dollars, the target's 110 pips, halfway would be 55 pips. We would be banking half at 55 pips. Okay. We trade a mixed bag of currencies, commodities and indices, so we don't get overexposed to a single market. It's very easy when trading to have lots and lots of the same trades, basically. So for example, you might be trading dollar related currencies, and that means that you're overexposed to the dollar. So you'll find that we've got a mix here. So we've got euro, dollar, New Zealand, Swissy, dollar CAD, which is good because the CAD is very much oil related. Dollar Japanese yen, because you've got the risk side of things there. So the safe haven flows into the yen, which means that we've got a variety of different situations that could be occurring in the markets, meaning these currencies will behave differently. We've then got 3 different indices. So we've got 2 European and then the Nikkei, or the Japanese 225. We've got oil here, and these ones, all of these top ones in the green, are what I would say a day trade. So 15-minute to 1 hour charts. All of these setups that we do on here are based on the 15-minute to 1 hour charts. So you'll be getting in and out of these fairly quickly. However, we do have some slightly longer term ones, so some intraday trades, which we may hold for 1 to 5 days. Worst case scenario, maybe a week, or just over a week, and they are just these 3 here. So 2 currencies and one indice there. But again, to make that clear, that is so we've got a mixed bag. So we're not getting overexposed, and we're getting setups at different times of the day, different parts of the market, different things are happening. We're still getting trades off. Use these stop losses and position sizes as a guide, but always check the exact figure against the signal message alert. So what that means is we've got a basic stop loss and a basic limit order in here for every single pair that we trade. But it might not be 55 pips, it might be 60 pips, for example. It's going to be there or thereabouts, but it will change depending on the strength and resistance or support and resistance within the charts. Key aspects of the trading charts that we're looking at and we're analysing, we will move these slightly. But as a guide, this is going to help you. The reason being is when you get a trade alert, you may be at work, you may not have time to be able to sit there with a calculator and work out what you're going to put on each position. However, if you've pre-worked this out and taken a screenshot of it or a photo, for example, on the euro US dollars, you know that you trade that at about £1 a pip, so 90 to 91p a pip. And when you go in and get your alert, you'll just put your trade on at that value. Okay, this is going to save you making mistakes, which a couple of people have done already in the trading signal. You know, we are new to doing this, people are new to following us. There's been a couple of people that have sort of gone on twice the risk that they should have gone on at, etc, etc. So this is going to save you doing that. Some brokers do have a minimum position size. That will mean that you cannot enter a trade. Okay, we'll go through that shortly and what that means. If you do not trade in, if you do trade in lots, then if you don't trade in lots, then ignore all the lot calculations. So the lot calculations are at the end here. For someone who trades in lots, that's just clarifying here. This is the lot calculator here, and then your position lot size is based in here. Okay, just be careful, because when you do put a trade on, some of them are in thousands of lots and some of them are in just basic lots. So 13, and then you've got 11,776 lots. So it can be quite difficult to understand. But a fail-safe check is to check that the maximum loss, when you put the position on, it should always tell you what your maximum loss if your stop loss is here, and that is here in this calculation here. Okay. We will have a maximum of 5 to 6 pence of capital exposed to the market at any one time. So again, this is all to do with our signal, because I have set this up really for our guys who follow our signal, hence why these statements are all on here. But we will have a maximum of 5% of capital exposed. So what that means is when we're trading, if we've got 4 trades on or 5 trades on, and we put another trade on, we may only put it on at 0.5% position size, so that we're keeping our risk under the 5-6% mark. So how does the calculator work? Well, basically what you need to do is enter your account size here. So let's go from big to small. So if you had a £10,000 account, enter that value there. Just shortly, these will now all update, okay? So we are trading at a max risk of 1% per trade, okay? We've got a stop loss in there at 55 pips. Our maximum loss that we're allowed to accept on this trade is £100. Therefore, our position size is £1.82 per pip, okay? Ignore the lot size because most people don't trade lots, and if you do, you're probably best changing your settings to pounds per pip, but it is on there anyway. Mainly for me, to be honest, because I do use lots, and I know some other traders that have been doing it sometimes do use lots as well. Limits, that's the target that we're going to be aiming for. So as a general rule, as I said before, it's double the stop loss. And the reason for that is we want to achieve a risk to reward of 1.5. So let me explain to you how that's calculated. So we're taking half our position off at the halfway point between the entry price and the limit order. Therefore, that is 55 pips. Okay. So a half position size, we're taking off half of the position. So we've taken off half of £1.80. So around about 90p. At 55 pips, it's going to give us a profit of £50. Okay. Our second half profit is going to be the remainder of that, and it's going to be multiplied by the limit order, which is 110 pips. Now, more often than not, we won't actually hit the target or the limit because I'll be monitoring the trade via price action. And if I see the price action or the trade turning, I may give you a manual exit as opposed to it automatically being done by hitting your limit orders. That is what a limit order does. It means the software and your trading broker will automatically close you out at that point. However, if we combine the two based on this fact, that's our overall profit, £150 based on a risk of £100. So our risk to reward is 1.5. Okay, and that is what we're aiming for with regards to this strategy. So you've got the different markets there, and you've got the different stop losses, etc., and it all calculates it for you. If you had a smaller account size, so let's say you only had a £500 account size, which is fine, we all need to start somewhere and grow our accounts. And this is the important thing. I've had people with very small accounts trying to overgear or over leverage themselves. This 1% stays the same no matter what size your account is, unless you're going above 50k, and then you probably start looking at changing this to 0.5%. So at £500, a 1% mass risk means our maximum loss that we're allowed to take is £5 per trade. As a result of that, it means we're trading a trade size of 9p on the euro-US dollar, which doesn't sound a lot, and you're not going to make loads of money doing this, but the idea is this: you learn how to trade and learn how to build up a consistent account. You may be able to achieve, following our signal, 10% a month growth. So if you added that on to your account size at 10%, plus you then looked at maybe putting in £200, £300 a month into your account, then you look at how this would grow, and within a short period of time you'll then have an account in the thousands of pounds, and in a few years time tens of thousands of pounds. And that's really then when you can really start seeing the growth within your account. So this, regardless of your account size, is all about learning how to trade and learning how to build and grow your account. So we're trading at 9p a pip, okay? Now this will mean two things. First thing is some brokers do not allow you to trade at 9p a pip. So some brokers have a minimum of 50p a pip. Well, what should you do? If I send out a trade alert and your broker says minimum 50p a pip, you shouldn't take the trade if you're meant to be trading at 9p a pip. Bottom line, do not take the trade. If you do, you're risking 5 times what you should be. And when it loses, that's when it wipes out your account or starts to really impact your account, especially if you then lost 5 trades in a row. And then that's when you start thinking to yourself, trading isn't for me, I'm going downhill with this, I'm just gambling. And then you think, well, I might as well just blame my account now and put a bet on, or try and revenge trade and try and win your losses back. And all the bad habits, the bad things that, you know, most traders at some point go through will all come into place, and it all comes down to this one key aspect of risk management. So the other problem you might have a 9p a pip, but it isn't really a major problem, is that you won't be able to close half the position. So FXCM allow you to trade down to 7p a pip, and if you're not sure how to open up an account, again we've got a video here. How do I set up a brokerage account? You can set up a demo account or a real account with them, and you can trade at 7p a pip. Okay, so 7p a pip. If you got a message to say close half at that point, you're not going to be able to do that. So it's not an issue, because you can still trade for the full target and the close out of the full position, but you will ignore the close half the trade at that point. Okay, so the message that I send out closing half the trade, you ignore that if you're trading at 9p a pip. If you try trading at 14p a pip, then you probably could, because it'll let you close out 7p and then another 7p. Okay, so on this one you probably could, but on most of them you can't. But when you start going up to £1,000, then you can pretty much follow it exactly, and you'll be able to close out half positions. Okay, hope that makes sense to everyone. So just using the euro US dollar, because we have had a trade off this afternoon. I mean, we've actually had a very good day today. I think I'm over. This is my account now that I'm using for my signal. So basically, I've started off, and this is going to just follow our day trading signal. I'm going to have a separate account for the swing trading signal, and then I'm just going to trade this one based on a day trading signal. So we've had a really good day today. We had a good runner on the JR30, the DAX this morning. Made a nice profit on that. Some of this gain, to be fair, is come back. We had about 300 quid drawdown or loss yesterday. It wasn't a banked loss, it was a drawdown loss, but that's come back the other way today, which happens. It does swing. So when you look at this, you think, oh, he's made £800. No, that's not always accurate, because some of it might be coming back from yesterday, and it's not always banked profit. So bear that in mind. Okay. However, this is the account now, so we'll hopefully be able to grow. I'm going to grow this account to £200,000 following this day trading signal, and I'll do a video and an update on that. So we're going to go from £20,000 to £200,000, and then we're going to do some other stuff with the money, which is going to be a later video set. But you know, that's going to be a year or two away, I would have thought, at least, to do that. I'll have to crunch the numbers, but yeah, so we've had a good day today doing the signal, but this is one of the trades that we've just had off. And just to give you an example, so we've entered a trade short on the euro US dollars. Okay, our stop loss was around about the 50 pip mark, or 55 pips, with our limit order down there. So you can see that how this works. So we've got a trade off here. The 10.3 means we're currently 10 pips in profit, hence the green arrow there. And we've got a stop loss in place, which means if price comes back up and goes above, hits the stop loss or through it, means we're going to have lost our total risk, which is based on the calculation before. So if I click on that, my total loss on this account, on this trade, will be £189. If we hit our target, £378 at the moment. However, what we would do along the way is we would bank half the profits. So when we get to 30, so I don't know, 20, what would it be? 50 odd pips, so somewhere down here. When we got down here, you'll get an alert to say close half your position. So you'd right click, close position, you'd half £3.78. So you go £1, I don't know, £1, what's that, 150, 180, possibly 180. I'm not going to do it now because it's going to actually close it, and obviously I don't want to do that. You can do it this way. 180. Now you're not always going to get exactly 180. You'll get the nearest amount. So it could be 193. It could be 185. It doesn't matter. It's not an exact science. It does not matter if you don't get it exact. But you're closing part of the position and banking part of the money. So that's it basically. That's your trade in there. That's your stop loss in the red. That's your limit in the green. Ignore all my indicators and stuff down here and what I'm doing down here. That's all stuff that will be later parts of the video, pivots and things like that. We'll go through that at later video sets. So the main thing from this was the risk management in this sheet, and utilising this to ensure that you get the correct risk management. I hope that helps, and you'll hear from me soon. Thank you.